Well, hello, welcome to another trading day right here in Lagos, Nigeria. We see the stock market looking strong, Naira gaining in one market but losing in another. So much to unpack today, but let's get to the top stories that get you ready for that trade as the week winds down. And there's drama in the global oil market. We're seeing a big drop there, 3.33%. Down for Brent, for government revenue, definitely bad news, $63.89 per barrel, and we see WTI crude 3.45%, a bigger drop. Yeah, WTI always leads with either a gain or a drop there. $60.97, that's for WTI, holding on to that $60 level, but who knows if that's going to if that's going to hold, at this point. But we'll get you what's driving sentiment right there in the oil market later on the show. Meanwhile, Nigeria averaged crude oil production output of 1.468 million barrels per day in the first quarter of 2025, which is much lower than the 2 million barrels per day target set by the government. This was contained in the latest monthly oil report released by the Organization of Petroleum Exporting Countries for April, according to OPEC. The total output for Nigeria recorded in the first quarter of 2025 is also lower than the 1.43 million barrels per day crude output recorded in the fourth quarter of last year. However, OPEC's latest monthly oil market report shows that Nigeria retained its position as Africa's largest crude oil exporter within the period under review, as the country's crude oil exports to the U.S. increased despite a decline in imports by the world's largest economy. Meanwhile, OPEC says it expects global oil demand in 2025 to grow by 1.3 million barrels per day year on year, which is unchanged from last month's assessment. And Brazil's state-owned oil giant Petrobas is seeking to reestablish its presence in Nigeria's oil and gas sector with a renewed focus on frontier deep-water exploration. This development was confirmed by Nigeria's Minister of Foreign Affairs, Ambassador Yusuf Turga. The move comes as Nigeria's economy undergoes significant reforms under the leadership of President Bola Tinubu, creating renewed investor confidence and opportunities in key sectors. Petrobas, which had previously exited its operations in Nigeria, most notably at the Agbami field, is now in active discussions with Nigerian authorities to chart a new course in the country's deep-water oil exploration landscape. And the African Union recently adopted the Lome Declaration on Debt. The Union adopted the charter at its conference on debt themed Africa's Public Debt Management Agenda, Restoring and Safeguarding Debt Sustainability. The declaration, which marked the highlight of the conference, outlines measures to resolve Africa's current debt challenges. Definitely debt on the front burner there for most countries at this point, even the developed countries. To other matters now, as part of efforts to promote safety, risk management, and regulatory compliance in Nigeria's built environments, the National Insurance Commission says it's set to enforce compulsory insurance for public buildings and buildings under construction. This was disclosed during the fourth meeting of a joint committee on insurance for public buildings and buildings under construction held in Abuja yesterday. The meeting, which was chaired by the Deputy Commissioner for Insurance, Mr. Kerete Gamikon, brought together stakeholders from the insurance industry, fire service, quantity surveying profession, and regulatory bodies to review the status of implementation and enforcement. And also, we see stakeholders in Africa's food systems gathered earlier this month, which marked a significant milestone in the advancement of organic and ecological agriculture in West Africa. Discussions focused on strategic collaboration, regional policy alignment, and scaling up ecological practices to ensure food security. Take a listen.
Well, this May, history was made as the West African Secretariat of Ecological Organic Agriculture convened its inaugural meeting of centers alongside the Regional Steering Committee of the Ecological Organic Agriculture Initiative to chart a sustainable future for West Africa's food systems.
We must realize, we may realize that this meeting is very, very important to the achievement of the ECOWAS strategy. It is equally important to state that ECOWAS' willingness to continue to work with us is dependent on the outcome of what we have done. ECOWAS has its own strategy to backstop, to check what we have done. Most times reports are not enough, but confirmation of our report is equally important. So please feel free to indicate how you'll be given an opportunity to address us.
Key outcomes of the event include formalization of WASOA's coordination framework for regional organic agriculture centers, adoption of a 5-year action plan to promote agroecology, climate resilience, and market access, amongst others.
We noticed that in our region, we have problem of climate change, we have problem of food insecurity, and it is we have also problem of youth employment. A lot of our youth leave the rural area to the cities, urban area, and some of them travel abroad looking for better income. But you know the potentiality of our agricultural area, and it's very good that we support this youth to be businessmen or businesswomen in agriculture sector.
The 2025 WASOA inaugural meeting marked a critical step towards sustainable agriculture in West Africa by fostering regional collaboration, policy alignment, and private sector engagement.
And now to our first conversation as Nigerians continue to grapple as the average consumer with soaring costs of living. The debate over government regulation of prices that has taken center stage once again. This follows a recent ruling by a federal high court in Abuja, which held that only the president, and only for a limited period, has the constitutional authority to regulate the prices of goods and services. Well, joining us to unpack this, we have Dr. Monday Siborgo, who's an expert in the matter, joining me right here in the studio. It's great to have you. Good morning.
Thank you. Good morning.
Yeah, so, definitely when there's a cost of living crisis, I guess somebody tries to step in to protect the consumer, which we need, at this point, because the average consumer is going through a lot, in the country. Even, globally, we've had that inflation battle. Some countries are winning the battle, against inflation. Some are not, right now with prices staying elevated. So what do you make of this ruling, giving the president the power to, control prices for a specific period?
Well, I think that power was given in consideration to curb the excesses of maybe corporations, both public and private, where there are cases of market monopoly, market manipulation, or where you have cases where it is in the interest of citizens, particularly for essential commodities, not for value-added services. Essential? Yes, it's essential commodities. What people cannot afford to do without. For example, there are 3 basic needs. We talk about shelter, you talk about clothing, and you talk about food. And paramount on that list today, is food. And so if government comes in to intervene to say if prices are pegged at XYZ, consideration is taken into factors surrounding that cost of production, the profit margin that could be allowed, and government would also compensate in terms of maybe providing subsidy or certain incentive in that area to allow, and it's just for a given period of time. I think this journey started in the early 70s, where the administration considered the turnaround maintenance of our refineries not meeting up with production capacity, and government had to step in to regulate. And then they created agencies where the power of the president was ceded to do or to carry on such functions. Where it is clearly absent, you see the federal court, the high court ruled that it is only the president, and within a limited period of time. It's not going to be in perpetuity.
So what do you make of, this the latest ruling?
Well, Nigeria runs a free market, right? Despite the fact that we regulate some form of activities despite in the free market to avoid manipulation, breaches in competitive markets, and also to ensure that best practices are maintained within each sector. So it's okay that the Federal High Court just clearly and explicitly defined that you cannot, irrespective of the regulation or the law that establishes any agency, cannot fix a price for another person when you are not involved from the production to the market process. You have no right to do that. You have right only to intervene in something that you have capacity over. And that's what the Federal High Court has maintained. In a free market, it means that people have right to obtain, they have the right to reject. So you cannot fix a price for me for a product you did not take part in the production, and you cannot peg a price for me when you are not certain and cannot prove that there's a market manipulation or monopolies involved.
Right, and when it comes to price, definitely we've seen situations where some news, we get some news maybe in the global space or within the country, and the next thing you're seeing the prices of those products, just skyrocket immediately. When there's good news, the prices don't come down as fast.
Of course. The essence of any business is to maximize profit. That's the truth.
Okay.
Yes, businesses are, the objective of any business is to make profit. But more than that is to maximize profit. So what you do is when the people take advantage of, let's say, market speculations, policy change, policy swings, and can swiftly peg their price there. And then because of the uncertainty that policy may have a backlash, there's no need for you to, to backtrack. But we've seen cases in the oil and gas market where prices go by 10 naira, tomorrow is down by 15 naira, tomorrow is down by 10 naira, and another day is up by 20 naira. Yes, that shows that it is being determined by market forces. And global crisis, for example, the Ukrainian-Russian conflict also spiked up.
Yeah, we see how that impacted, food.
Yes. Right now, India, Pakistan too will spike up some also in terms of shipping and movement of goods and products within those waterways. So there are a lot of things that also trigger that. Crisis, riots, speculation of people moving, migration, even weather fluctuations can affect. Flooding can also affect prices. Oh, we're not expecting product.
So a lot of things.
Yes, a lot of things.
Impact prices.
But the thing is, that's why you have regulation. That's why you have agencies that are saddled with that responsibility. And what they are saddled with that responsibility to do is to establish beyond reasonable doubt that there's a market manipulation. Right. Or taking undue advantage of situations, and then they can whip you back to line.
So can these regulators, do they have jurisdiction when it comes to private businesses?
Yes, they do. They do.
Or are there some businesses that are exempted?
All businesses, no business is exempted. But what it must be established beyond reasonable doubt that there's a clear case of manipulation, clear case of taking advantage of the situation, or clear case of profiteering or taking excessive...
But sometimes manipulation is not that clear, though.
Oh, yeah, it is. It is by those who are experts in it. Those who are in that agency have been well trained to tell you where there's a market manipulation.
And, when you have a market with just, a few players, or just, one player, then, most of the time it's hard to say, okay, there's manipulation here or there. But what if it's a situation where the business environment is really bad? And, we've seen what happened, with the Naira, with weakness and all of that. And this business decides, okay, you know what, I'm taking up my prices. But the government, tries to step in and say, you know what, how about we negotiate? This one, they're not forcing the business. They're saying, you know what can we do to, bring that up? I guess that works too.
Yeah, if government is willing to provide incentive. But note, and as I said, government's responsibility is to necessities, not value-added services or luxuries, right? So if you are asking for government intervention in terms of transportation, right, it's understandable, but not government intervention because people want to buy cars. and the cars are out of their reach. But if government is intervening, oh, we want to procure buses, and people who are in this business can't afford to buy these buses because transportation is a necessity, then government is intervening in that direction. It's understandable, right? So we must get the priorities right of where government intervenes or talks to a market operator to have consideration for price reduction. And they must also provide the incentive that should encourage that market operator to do so. So if that is clearly absent, then the basis of that discussion is uncalled for. Okay. And as I said, the priority of government is to deal with necessities, not luxury or value-added services. Okay, so let's imagine for a value-added service now for a company that deals in that kind of business, and the prices are really high. Government says, you know what, I need you to drop these prices, and the business maybe agrees or disagrees. What would you say is the impact of that, going forward? Well, there are definitely, even anytime a business increases its price, two things happen. They will either acquire a new set of customers and then lose some. In some cases, they lose a lot, but they will look at the markup to see whether the numbers that they have can sustain them as a business. So when this happens, these are likelihoods of things that will happen anytime these fluctuations happen. But for me, government telling somebody to peg a price is not appropriate. It's not right. Do you think, sometimes, or maybe most of the time, the reason why we're even having this conversation at all and why the business is even thinking of raising prices, do you think it would be the fault of the government? Well, government is largely, our biggest industry in Nigeria is the government, if you should know. The biggest industry is the government. So everything revolves strategically around the government. Forex, if you're dealing with a product that largely depends on buying your raw materials or content or whatever in foreign exchange, that is going to be determined by the Central Bank of Nigeria. And the banks would follow suit and make their markups. And then if you are not on the list that government considers as priority for Forex, you have to source elsewhere. So you'll be talking about bureau de change or companies that already have some currencies in their domiciliary accounts to assist you. And it will come at a cost. And if it comes at a cost, it means your price would also shoot up. So if, for example, you were providing a service, say, at 4,000 naira, as at 2023, by now it should be about 25,000 naira, given the way the dollar exchange rate and other. And it's sad that yes, incomes don't rise like that. Well, that's the tragedy of the system, and that's the responsibility of those who are in charge of monetary and fiscal policy to see to it that the cost of living also goes alongside with that. So we've been over the debate of minimum wage and who should pay, who shouldn't pay. Normally, but as a country, you should define a minimum wage that every person, irrespective of the kind of business you do, that should be the minimum you should pay. But today they tell you, if you have employed 5 or 6 persons, you must have XYZ number of. So some persons are exempted from it. So there are people who are earning 20,000 a month. People are earning 30,000 a month. Some are earning 50,000 a month. The 70,000 is a far cry for many people. So the truth remains that if government takes into consideration that their monetary and fiscal policy is not giving the desired impact, they know what to tweak, they know what to adjust, they know what to do, or the stimulants they will put in place in the system that will encourage economic activities and generate more revenue that will encourage employers of labor to pay more. Right now, employers of labor are grappling to survive, and coupled with the fact that they are hit by different forms of levy and taxes here and there. As a small business, you pay up to about 14 to 15 different levies in a month. So instead of, trying to either negotiate with a business to, bring down their prices or dictate to them, their prices, what do you think, a government should do instead? Because, we've come to a point where most governments are struggling with revenue at this time, so they can't even pay for some of these subsidies.
anymore. So
No, I don't
what
think it's
should
a
be the-
revenue problem. Governments will not say that. That's a lie. They made a lot of yield from the removal of subsidy. What they are battling with is the huge debt, which were not put in any productive activity. Taking debt to pay salaries, taking debt to meet up some lifestyle of governors and state governments. Today, they are drastically reducing those debts from the revenues they've made. So it's not about revenue. It's about the lifestyle, the pattern. Being accountable to economic activities. If you rake in so much money, you should deploy it to a lot of economic activities in the states, at the local levels, state and national levels, that will generate more funds. And once you have a lot of economic activities coming in from there, there's every likelihood that there will be some form of stability. But at the moment, there's a lot of money that has come into the system, and it's servicing debts.
So it's not a revenue problem. I guess it's a spending.
Spending. We need to be prudent. That's one. Because if we're talking about revenue, we had this clamor. But what is the debt ratio today to our revenue? It's close to about 80% to what you're making. So 80% is going off as debt.
Right. Yeah.
So the states at the national, they're all grappling with around 19 to 20% to run the system. So you would find some form of stagnation here and there.
Right, and definitely the debt accumulation didn't start today. It started many years ago.
No, we're not saying it started today.
Right.
It's a product of
past
over
actions,
the years,
right.
and then we've not been very conscious about it. There was a time we made every effort to do that, and that was what led to the emergence of the Debt Management Office. Well, I don't know what they do right now.
All right, definitely so much to unpack, and we were hoping, that the average consumer in Nigeria gets a break, at some point, and hopefully the government and private sector can have some kind of handshake, and we don't have to dictate prices, going forward. Let the forces determine that.
All right.
Thank you so much. It was great having you today. That was Dr. Monday Asibogu, is a media expert and joining us today to unpack all of this price matters. Thank you so much.
Thank you.
All right, we'll take a break now. When we come back, we'll analyze regulation in Nigeria's capital market as the Securities and Exchange Commission gets ready for the Capital Market Committee meeting. That's a moment to stay with us. Nigeria's capital market is once again under the spotlight as the Securities and Exchange Commission is set to convene its first quarter Capital Market Committee meeting, a critical platform for regulators and stakeholders to evaluate progress, identify challenges, and chart new directions for market development. Well, joining us to unpack this and what to expect, we have Mr. Bola Jamale, the Executive Commissioner, Operations, Securities and Exchange Commission, Nigeria. Great to have you on the show, sir. Good morning.
Morning, how are you doing?
I'm fine, thank you. So I guess it's that time again where all market participants gather to hear, what to expect, for the markets this year. What should we be looking at? What's on the front burner for this meeting?
Good. Well, two major things are on the front burner. The first, obviously, is the release of the ISA, the Investment and Securities Act, which we're really happy about. That's going to change the scope of the capital market, the direction of the market. It would expand our abilities as a regulator, and it also set some direction for the players as well. That's one of the major things. The second major thing that's going to be happening is looking at the closure of the Capital Market Master Plan, which was set 10 years ago. This is the 10th year of that master plan. We're coming to an end of that. And so we'll be looking at what's going to happen next after, by the time we close, how far we've gone with it in implementing the objectives of that master plan and what's going to happen in the future. So those are two major things that are going to happen. Others would be setting some terms and conditions for operating in various other aspects of the market.
All right, talking about the ISA 2025, how would it enhance Nigeria's capital market, regulatory framework, and what would you say are the key changes, investors should or are seeing right now or should expect to see?
Okay, well, one of the first things is that it reaffirms the fact that the SEC, the Securities and Exchange Commission, is the overall regulator of all capital market activity. Now, it then defines what capital market activity is, which is the invitation of the public to come in and invest. It gives regulatory powers and it gives enforcement powers to the SEC to the extent that we can now prosecute, and we actually have started acting to prosecute some players, illegal players. It defines virtual assets and digital assets as coming under the purview of the SEC as well. And so that area will be receiving SEC direct regulation, and we're actually inviting people under it to come in and register. It defines the fact that those who are not registered, who are running platforms, digital platforms, it defines as well that those ones are actually, it allows us to define that those are actually illegal operators in the market. So it sets a lot of clarity into the digital space. It also brings derivatives into purview. It brings commodities under our purview. So there's a lot of things that are now brought under control of the SEC. The whole idea being that we want an organized market and we want legitimate registered operators to run the capital market activities in Nigeria.
And talking about clarity with digital currencies, there's always been that argument about, Bitcoin, being a security or not a security. We've seen, in the with other countries, it's not been easy to classify Bitcoin as a security, and we've seen arguments even here that the ISA, classifies Bitcoin as a security, and that shouldn't be. What do you think about that?
Okay, so it depends on the purpose. If you use it for a payment method, then it is not a security. But if you're buying into it for future, and essentially a security is something you're putting your money into in the hope that you're going to get a return sometime, a growth towards the future. So if that's your purpose, then it is being treated as security. But if you're using it as a means of payment for a transaction or as a means to an end of payment, then it is not a security, it's actually a currency.
So I guess...
So, of course, the discussion still continues, and the purpose.
So it has more than one classification.
Correct. So we are now operating on the security side, that if it is used as an investment, it comes under our purview.
All right. So, talking about securities and some... definitely the scams are still, with us at this time. What strategies will the SEC and capital market stakeholders implement to boost, retail investor, protection? Because, most of the time you see some of these hard to resist platforms. They promise you incredible profit. You end up losing, the money that you actually have.
So the best protection for any investor or for anyone against anything is knowledge, is understanding of what you're looking at. If you don't understand what you're looking at or you have no knowledge of it, then you're probably best advised to investigate it and see what it is. Unfortunately, those offers and those tantalizing offers that come, they're so attractive sometimes that people get into them. For us at the SEC, we consistently tell people to first of all check under every single document that is written, that is approved by the SEC. You will see an advice saying, check with your financial advisor. Unfortunately, a lot of the time, the financial advisor, in the case of these digital assets that are being sold, unfortunately, a lot of them are setting out to actually scam you. Now, that then comes to another point, which is the fact that people tend to look at opportunities, and once they see 100% return, they forget that checking. They forget that due diligence, which is necessary. And so we as SEC are continuing to spread the word, We are, at this CMC, for example, going to charge operators to get in touch with their contact points. Now, the SEC has contact points with operators, because we're a regulator, but all the operators in the market do have contacts with their clients. And so they will actually educate their clients, and hopefully the word will spread from there. The SEC has been in touch with the National Broadcasting Commission to the extent that if any broadcasting organization, be it a radio or television station, if they are involved in promoting some of these illegal operations, they will be found liable, and that comes under the regulation, that comes under this ISA as well. If you're spreading false information about investment opportunities, or you're spreading scam opportunities, then you fall under the enforcement of SEC. And so, again, we're trying to shut down those who are coming in, and we're also trying to enforce against them, and at the same time, we're trying to educate the investors. We physically have been to a couple of sites where we have large groups of people. We consistently appear at conferences or anywhere where we have groups of people. We have engaged with religious organizations at the highest level, and hopefully it will spread downwards. And so we'll continue to try and get across to every single Nigerian. Some of the other things that we have done, we started talking to state governments, to municipalities, all 774 of them, to make sure that they to encourage them to spread the word among their citizens as well. So we will continue to reach out. Something else we have done is we've created a watch list on the SEC website. And so if you go to the watch list, you can see those who we have classified as illegal operators, and you'll also see those who have actually passed the test of the SEC, and we believe that their instruments are fit for public investment.
So is it possible for maybe a platform to comply with the SEC rules and, operate, under those rules, but at the same time morph into some kind of scam platform and claim that they're registered under the SEC?
So, yes, it is. But part of our rules say once you're registered as an operator, then one of your first duties is to report to the SEC on anything you're doing. So once you want to start up a new product, you will register that new product with the SEC. And if we believe that that product is not fit for the market, we will tell you not to. Now, again, you're required as a registered operator to regularly file in your returns. If we see returns that are that we cannot attach to what you had been doing originally or to what we have approved for you to do, then again, it has cause for investigation. We have a very strong monitoring and investigation procedure, and as a result, we will be able to find out. Now, is it possible for people to attempt to do that? Yes, it is possible to attempt, but we don't see too many cases of that. It's only once in a while we see that deviation into some products that we believe are not fit, and that's shut down. We have a very, very strong cease and desist procedure as well. So it is possible for people to be tempted, but it is likely that SEC will find out very quickly.
Right, and you shut them down immediately. All right, let's look at other matters now. We keep, talking about attracting, foreign investment. Will the SEC introduce new policies, to attract foreign portfolio investment, even though we're seeing current economic challenges?
So, our attitude to foreign portfolio investments is rather interesting. Portfolio investments tend to be they move very quickly, both in and out. What we are more focused on, as opposed to where the investment is coming from, is building a stable market. Once you have a stable market, then investments come in from all directions. We will not be directly creating rules and procedures to favor foreign investors in any way. What we'll be trying to do is trying to bring clarity to the market, to make it an easy market to get into and get out of, a reliable market as well. So we're building the structures as opposed to targeting particular groups of investors.
All right, so how would you say, right now the Nigerian capital market is adapting, to global trends we're seeing with fintech, digital assets and sustainable finance?
Very well. What we have seen, okay, I'll start from the top level. At the SEC, for example, we have established regulatory incubation for both those who are operating in new projects and those who are operating in old projects that are traditional projects that are digitalizing. We've set up regulatory incubation platforms for them. They're registering. We have about 70 or so applicants, and we have about 13 who are already in incubation. Now, what that does is it already opens up the market to a lot of the fintech and innovative means of raising capital. We again have quite a few digital crowdfunding platforms that have started as well. So that is what that does is it opens up the retail end of the market and the fintech end of the market to both local and international players. On the sustainability side, we're currently in Doha, and we're actually joining the International Committee on Sustainable Exchanges. So we are working quite a lot in that direction.
All right, so definitely there's also that issue about market manipulation and insider trading. Are you seeing any improvement on that front, or are there plans to, squash it?
Well, always, it's highly advisable to squash it each time you see it. What we're doing in that regard, as technology, again, a lot is going to depend on technology and the tools they're employing. We are going to deploy hopefully in a very short period. In the next couple of months, we should be deploying a SupTech supervisory technology that would allow us to actually interrogate transactions that are happening on the markets. We've got, as you know, we've got about 6 markets that are operating in the country, so that are fully operating. So we'd have a technology that would be able to see the real-time, minute-by-minute transactions on each of those markets and relate them as well, so we can actually see market manipulation and track those kind of things. In addition, remember we have the clearing systems in place already, and central counterparties as well, who also have a lot of data and a lot of information, and they send that information to us on a regular basis.
All right, definitely so much to unpack there. We do look forward to this first meeting. That's for 2025. Thank you so much for helping us unpack this. Mr. Bola Jamale is the Executive Commissioner for Operations at the Securities and Exchange Commission, Nigeria. Thank you for coming on today.
Thank you. Thank you for having us.
All right, now let's go to other matters now in the commodities market. Yeah, we did see that dramatic drop there in the oil market. Let's bring in Dr. Ifeoma Nwokolo, the research manager at Financial Derivatives Company. Great to have you on the show. Good morning.
Good morning, Ladi. Thank you for having me.
Great to have you. So why are we seeing this sharp drop right there in the global oil market?
Well, there's one thing is certain, and we have to acknowledge that oil price is geopolitically driven. Yeah, so no matter what is happening there, it is geopolitically driven, and we don't have control over it. So you see, when there is a geopolitical dynamics, you see oil price fluctuates. We have seen oil price oscillating between $60 and $65 in a few days from now. And funny enough, yesterday it was about $66 per barrel, and this morning it dropped to about 64 barrels per dollar. So we shouldn't bother about why the change. We don't have control over the change. I say that because Nigeria does not have control. We are not a price leader. We are not price follower. We are price takers. And we are receiving this shock because we are vulnerable to it, because we depend solely on exports of crude oil for our foreign earnings. And we see that close to 60-70% of our export earnings are from exportation of crude oil. So that is why we are seeing this shock in price of oil. And funny enough, it's going to go further It's going to decline further because according to the International Energy Agency this morning, they forecasted that the demand for oil is going to drop because of trade uncertainty, which was triggered as a result of the tariff war. Economic activities actually decline, and once global economic activities decline, the demand for crude oil will decline. And once the demand decline and the supply is high, what is going to happen? We're going to have a bearish price of crude oil, coupled with the fact that the Wall Street Journal has also forecasted that oil price is going to go as low as 50% before the end of 2025. And let's not forget that OPEC Plus is also promising to increase crude oil supply by over 4,000 barrels per day. So what is this telling you? It's telling us that the prices of crude oil will continue to decline. It's at $64 per barrel today, and it's okay for us. We are going to manage it because
right.
Our physical break-even point is $60 per barrel. If it goes higher to 70, 75, is a plus for us. It's obviously going to align with our budgets and crude oil budgets for the 2025. But if it goes below 60 or below 50% as projected, Nigeria is going to struggle in terms of our revenue, struggle in terms of fiscal deficit, struggle in terms of weaker naira, and so on. But the most important thing at this point is not even the price. Aside the price of crude oil, how do we manage this revenue from oil?
Right. So, Dr. Nwokolo, Nwokolo, so, definitely from all indications, it seems oil prices are set to be bearish, mostly bearish, in 2025, even from the forecast we're getting from the IEA, from OPEC, and, all of the players, in that market. So, definitely an oil exporter and, a country that's so dependent, on oil revenue, what should we have been doing, yesterday to prepare for this time?
Honestly, there's nothing we can do. We cannot control the price. That's where I'm going. Now, we really don't have control over the price. What we should do, what we should be looking out for is how efficiently have we been managing this oil revenue that we have been getting. So that in times of shock, this is what will keep the economy resilient in times of shock. So there's no magic we have to do. We are not a price leader. We are not price followers. We are price takers. So there's no magic we definitely would have done between yesterday and today. Nothing.
Is there any other export commodity we can fall back on at this time to say, okay, oil prices are going down. Let's look towards this other commodity. Let's try and ramp up production of that.
Yeah, we can diversify our economy. It's very important to diversify our economy. If you go to Agric, the last time our earnings from other non-oil exports increased. And if you look at that, it's mostly exportation from crops, cash crops, like cocoa and the rest, exportation of minerals. But I tell you, we don't just export the raw, we need a value chain where we can benefit more, because it's when you go into value chain, you actually benefit more. It could even help to improve employment level in the country. So we have to diversify our economy. And when we are diversifying, going back to agriculture, using our outputs as, using our output, and this will also boost our manufacturing sector. So give or take, what are we saying? We are saying we should improve our manufacturing sector. Once we improve our manufacturing sector, we are not import dependent. We become less import dependent, and this will help boost employment and other things. So rather than defrogging from agriculture to services. So there's need for diversification. So we don't depend solely on oil. So because it's making us vulnerable to global oil price shock. And
All right.
that's what we are seeing.
All right, let's look at our beloved currency right now, the naira. We did see appreciation in the official window, but it seems there's weakness in the parallel market.
Yeah, the parallel market is a market where everyone has access to. So the pressure is in the parallel market, not in the official market. That is why you see that happening. And this couples with the fact of, you see the price of oil. So these are fundamental factors. So why the naira keeps oscillating is because the fundamental economic factors are weak. When you talk about price of crude oil now, our balance of trade, talk about our reserves, talk about our net FDI inflows, FPI inflows, all of these things, they are weak. So that is why we have this oscillating. In January, we had naira at about 1,500, but today it's trading well over 1,600. So all of these factors, even though the CBN is intervening, we have the dollars, sales to BDCs, these factors are technical factors that are temporal. They will not last. What we have to do as a country is to ensure that we improve on these fundamental economic factors. Once we have a stronger fundamental economic factors, our currency will be stronger. Coupled with the fact that, let me give an instance of the FPI data that came out a few days ago. We saw that FPI outflow was over $420 billion, which is 251% higher than what it was in first quarter in 2024, which is $119 billion. This is a sign. So it could be the reason why we are saying this. See, our reserves too is struggling. So all of this is impacting on the naira.
Right.
Coupled with the uncertainty is high. A lot of unknowns. So a lot of people who are buying dollar, keeping their money in dollar as a safe haven.
All right, so, Dr. Wokolo, I know definitely lower oil prices, that's bad news, when you're looking at revenue, but I'm hoping that could translate to lower fuel prices, in Nigeria going forward. Hopefully, I'm praying.
Yeah.
Well, thank you so much. It was great having you. Dr. Ifeoma Wokolo is a research manager at Financial Derivatives Company. Thank you for coming on today.
Thank you, Ladi, for having me.
You too. All right, let's take a break now. When we come back, we'll see what's happening in the global economy space. That's in a moment. Just stay with us. And in the global space now, talking about currency, we see the Romanian leu recorded its steepest one-week decline since 2009 financial crisis as mounting political uncertainty that rattled investor confidence. The currency fell about 3% against the euro, reaching 5.12 run amid growing support for far-right presidential candidate George Simon and the collapse of the governing coalition. Analysts at Capital Economics, they warned that the leu remains overvalued by about 15% relative to Romania's economic fundamentals, suggesting that the potential for further depreciation in the coming weeks in response to the Central Bank of Romania was stepped up intervention in the foreign exchange market in an effort to stem the slide and stabilize the currency. We see the central bank out there working hard. Then Germany's Federal Statistics Office reported that the wholesale prices rose by 0.8% in April compared to the same month last year. The modest increase reflects ongoing adjustments in supply chains and input costs as Europe's largest economy continues to navigate post-inflationary pressures and shifting global demand. Analysts will be watching closely to see whether this trend signals the beginning of a broader pricing rebound or a temporary fluctuation in the wholesale sector. Then the UK economy is showing signs of recovery in the first quarter of 2025, following a sluggish end to the previous year. According to data released today by the ONS, that's the National Statistics Office, their gross domestic product grew by 0.7% between January and March, outpacing both the 0.1% growth recorded in the fourth quarter of 2024 and 0.6% forecast by analysts. While the stronger than expected performance offers a positive signal for the start of the year, early indicators suggest that growth may be losing steam as 2025 progresses, raising concerns about the sustainability of this rebound. Then, let's see what investors are doing. In the latest trading session, Kathy Wood's ARK Invest made a significant shift in its portfolio, with Airbnb Inc. emerging as the top buy and Palantir Technologies Inc. facing a notable sell-off. ARK's flagship ARK ETF snapped up 214,000 shares of Airbnb, representing the day's largest dollar value trade at approximately $29.63 million. The move signals renewed confidence in Airbnb's long-term growth prospects, while the reduction in Palantir Holdings suggests a strategic rebalancing with the fund's innovation-focused portfolio. All right, so that's what's playing out right there in the global space. We'll give you updates on what to expect for the markets. That's on Business Incorporated at 1 p.m. today. We'll find out what's happening with the local bourse and most of the international stock markets that we follow and see what's happening in the digital currency space. So thank you so much for watching. I'm Ladi Williams from me and the team right here at Channels HQ. It's bye for now.